it's always good to catch up with Yat to find out really what's going on at the broader level of crypto. So we're not necessarily just talking about Bitcoin, we're talking about the applications for Web3 technology at its broadest base.
BitcoinZella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZella today and enjoy the new edge.
Raoul Pal shares crypto market reflections, exploring key trends we'll break down together. Stick around to see what insights unfold next.
As this kind of wealth dichotomy has emerged over time, particularly driven by the debasement of currency, it means that younger people don't have access to buying a house and don't have access to the same investment opportunities and that kind of thing. And it creates a sense of desperation that crypto is going to be the answer. And it probably is. But everybody wants it to happen immediately. So it becomes a highly emotional state where it kind of, they demand, it's kind of, it owes them 100x or the 20x.
Yeah, I think a lot of it has to do with, I guess we can possibly blame MTV back in the sort of 80s, sort of where our attention span went from like 5 to 7 minutes. I don't know if you remember, I mean, you would remember, right? But for the audience, or the younger, they might remember, that the build up to the start of the song was probably 1 minute long, right? It'd be like, like if you listen to like songs from Dire Straits or whatever, it's like da, 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 build up, build up, build up, build up, build up, build up, right? Or if you look at the movies in the 80s or 70s, right? Like the James Bond movies, like the entire opening was like 5 minutes, right? You just sit there, right? And now, because of TikTok and Instagram and all this stuff, we're just like, I need the action in the first 5 seconds or I'm done, right? And I think that behavior is affecting everything, right? So it's like, hey, I don't have patience for any run-up of sorts, so I need my money now, or I need my reward now, I need my gratification immediately, right? And we see this not just in trading, but also in the gamification of toolings as well. Like, Robinhood, yes, it's a stock trading platform, but it's a game really, right? For the audiences, it's got leaderboards, it's social, right? And I think the powerful thing that crypto has done is it's sort of translated the language and the culture of Gen Z and, roughly that generation and younger, but into finance, right? And our generation actually doesn't look at finance this way, right? We look at finance in a much more traditional way, right? It's like we have to have some savings and we need to be sort of more organized in some ways, and there's risk and whatever, right?
Diversified portfolios.
Right, exactly. But for a lot of the Gen Zs, even if they were taught that, finance, or let's call it finance, like trading, it's a game, right? And there's fun in the game, right? Whereas I wouldn't say necessarily for traders, it's necessarily always fun in the game. It can be quite stressful. It's different, right? And crypto has really just sort of amplified that. And I think it's going to make the world more financially accessible for that reason, because it's speaking that culture to them. But at the same time, it also does mean that we're going to see more volatility.
Bitcoin's long-term trend is flashing a warning, and it has the market buzzing. Recently, the 200-day trend for Bitcoin turned bearish, an indicator many traders treat as a key signal for the end of a bull market. Analyst CryptoBurb believes this shift isn't just noise. He argues it reflects a real persistent change, supported by rising volatility, heavier trading volume, and more time spent below major trend levels. To him, the message is clear. The bull run may already be behind us, and 2026 could bring more downward pressure. This shift is reinforced by another classic signal. The 200-day moving average recently dipped below the 50-day moving average, forming what's known as a death cross. Historically, this crossover has been associated with deeper corrections, so traders naturally pay close attention to it. Some analysts like Marcus Thielen say the evidence is undeniable, and Bitcoin is already in a bear market, with current price strength appearing more like a reversal rally than a true recovery. Still, not everyone agrees with the bearish outlook. Henrik Anderson argues that while earlier buying pressure has cooled, it doesn't guarantee a full market downturn. Meanwhile, analysts watching shorter timeframes say Bitcoin could still attempt another push upward, especially if it holds above key levels in the $90,000 range.
guys, just macro and zoom out a little bit and just take a look.
People find it so hard to do that because they're obsessed by cycles and they don't see the big picture.
And there are cycles, sure. However, just zoom out, and unless you're trading, unless you sort of want to sort of do the day trading thing or something, but if you're just taking a macro view, then it's okay, right? And there'll be corrections and stuff, and there'll be cycles, but broadly, it's going in the right direction because, hey, guess where the world is going and what's important and all that kind of thing. Just consider the fundamentals, right? And that's exactly what happened. And I was just posting something, I think just like a couple of days ago, where I said the sort of greed and fear index, according to CoinMarketCap, is actually lower today than it was post FTX and Terra Luna. Right now, just picture that. And I'm like, guys, Bitcoin was, all the way down to 16,000, averaging around, let's call it, mid 20s, right? And Ethereum was hovering around 1,000. And the sort of fear index was like in the 30s. And right now it's in the mid to low teens. And like, what is going on, guys? Like this, just generally just like sort of, it doesn't make sense per se. But it just also shows how people are just, in some ways, sort of, I think a little bit fragile. Because I think I think to me, what's actually happened is it's sort of quite psychological, because it's one thing, I would argue that had Trump not been elected, and it wouldn't have been, we would still have been in the quasi-Gensler era of crypto, and there would be ETFs and so on. Everyone would be much more measured in their assumptions of where the market would go, right? But when Trump was elected, there was really exuberance, especially in crypto. It's like, oh my goodness, crypto's going to be everywhere. The Trump and family, they love crypto, so it's all good, right? And so everyone basically just expected it just to moon all the way, and not realizing that, I mean, in many ways, sure, Trump and the Trump family are obviously pro-crypto, but they have other things on their agenda. That's not just crypto, right? And so I think the scoreboard for crypto under Trump has been 50-50. And I think not because it's 50-50 in a bad way. It's just that, it's been great for institutions in a way, right? For Bitcoin and Ethereum and the majors. And it's been terrible for sort of certainly meme coins and altcoins and other areas in many cases, because, it's really been the sort of retail guys who, the existing retail guys, because new retail didn't really join, right? Existing retail guys who've been wrecked not once, not twice, but probably 4 or 5 times this cycle.
MicroStrategy has launched a new credit rating dashboard, just as Bitcoin's recent decline has the market on edge. The company, known as the world's largest corporate holder of Bitcoin, reassured investors by claiming it has more than 70 years of dividend payment runway, even if Bitcoin's price stays completely flat. According to their calculations, even if Bitcoin falls back to the firm's average cost basis of $74,000, they would still have nearly 6 times the assets needed to cover their convertible debt. Even in a deep drop to $25,000, MicroStrategy says they would maintain a 2.0x buffer. This update comes at a moment when investors are increasingly worried about potential liquidations among large digital asset treasury companies. Research analyst Lacey Zhang believes MicroStrategy's long dividend runway is realistic under stable price conditions, and argues that their strong software cash flow and diversified funding approach greatly reduce liquidation risks. Analysts also say MicroStrategy's steady accumulation of Bitcoin supports market stability, helping prevent deeper breakdowns during downturns. With a solid M/NAV ratio of 1.16, MicroStrategy still has room to raise capital if needed, positioning the company to continue buying and strengthening its long-term role in institutional Bitcoin adoption. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to BitcoinZella for daily news, all for free. That's all for today's video. Until next time.